Welcome to BigONE Weekly News Update. I'm Sophia. What is usually a quiet Easter trading week turned unexpectedly active as geopolitical tensions and shifting macro expectations drove movement across global markets. Markets rebound, despite rising tensions. Escalating tensions in the Middle East pushed oil above $110, yet risk assets proved resilient. U.S. equities rebounded from March's sell-off, with the S&P 500 up 3.8% and the Nasdaq gaining around 4%. Safe haven assets also rallied. Gold rose 4.2%, silver 4.5%, and Treasury yields declined as Federal Reserve Chair Jerome Powell signaled a more dovish stance. Strong payroll data reinforced the view that the labor market had stabilized, shifting expectations toward possible easing later this year. Crypto strength backed by institutional conviction. Crypto markets moved higher alongside risk assets. Bitcoin approached $69,000, Ethereum reclaimed $2,100, and Solana held above $80. More importantly, market structure continues to strengthen. Bitcoin ETF monthly volumes have exceeded $35 billion, while investor behavior has remained notably stable. Despite a roughly 40% drawdown over 6 months, ETF holders have largely held their positions. This contrasts with historical patterns in assets like gold, where similar declines triggered significant outflows. The resilience of Bitcoin holders suggests growing long-term conviction. Quantum computing rekindles security debate. A new research paper from institutions including Google Quantum AI has revived concerns about Bitcoin's long-term security. The study suggests that breaking Bitcoin's encryption may require around 500,000 qubits, far fewer than previous estimates. This sparked sharp rallies in quantum-resistant tokens, though the reaction likely overstates the immediacy of the threat. A distant, manageable risk. In reality, the gap between current quantum capabilities and required scale remains vast. Today's most advanced systems operate with just over 100 qubits, still far from what would be needed. Risk is also uneven. Older Bitcoin addresses are more exposed, while modern wallets significantly reduce vulnerability when used correctly. Most estimates still place meaningful quantum threats in the 2030-2040 timeframe, leaving ample room for preparation. Bitcoin continues to adapt. Bitcoin's security model is evolving. Upgrades like Taproot are already live, while post-quantum solutions are under discussion. Even in a faster-than-expected scenario, the likely response would involve protocol upgrades and wallet migration, consistent with how Bitcoin has handled past challenges. Institutional momentum builds. Traditional finance continues to deepen its crypto exposure. New Bitcoin-linked products are being designed to generate yield, while firms like BlackRock and EDX Markets are expanding infrastructure and services. This reflects a broader trend. Crypto is becoming increasingly integrated into the financial system. Conclusion: quantum computing introduces a credible long-term risk, but not an imminent one. The real takeaway is not vulnerability, but preparedness. Bitcoin's security model remains adaptable, investor behavior is showing increasing maturity, and institutional participation continues to expand. Together, these forces point to a market that is evolving beyond short-term narratives. In the near term, resilience, not disruption, remains the dominant theme. Join BigONE today and take advantage of the growing cryptocurrency market.